your agent sends you 20 houses, you're looking at those houses, you can sift and so if you know the market and you know the streets and you know that neighborhood really well, I can go through 20 houses in literally like 2 minutes, you know? Because I'll click the house and I'm like, oh, I know that house. I know where it's located. I know the house next to it's a piece of crap. I know there's a bar on the other side of the house that's way overpriced next.
Right. Gotcha.
Right? So once you get to focus in and hone in on your market, again, you'll be able to go through 20 properties sometimes in 2 minutes. But sometimes I'll get 3 or 4 properties sent to me in areas I don't know really well. It might take me an hour because I'm trying to figure out, okay, I don't know this market. This house looks really good. I need to do my due diligence here. Sometimes it takes a lot longer, and so, that's what's it's gonna take people a long time to learn this. So don't be like, set back if it takes you an hour to analyze one property, but you'll get better at it.
This is absolutely one that's process over outcome, because you might not see the instant results, but if you keep with the process, you'll see the results long term. I'm a big process over outcome guy. So this is one that learn to utilize the tools that are given to you and the knowledge, and as you're going through, learn these neighborhoods, know these neighborhoods, and even if you don't end up buying, investing in these properties, know what they went for. So if you have a house 2 houses down, at least you know what the going rate in that market is.
Here's another good one too that will help you analyze a deal in 60 seconds, and this is not literal, right? It might take you 65 seconds. It might take you 6 minutes,
right?
But I bought one recently in an area that I wasn't familiar with, and it's only 40 minutes from where we're sitting right now. But 40 minutes is a long drive, and I don't know that area. I don't buy anything over there. I called a partner of mine. I said, because I've done deals, I said, look, what do you think about this? He said, it's a great deal. Boom, that was it. Bought it. No, it wasn't Beaver County. But I bought it, but I teamed up with them. Okay, so they know the market. They have the resources out that way. We're going to do the deal. We're going to make some money, split it up. That's fine. Because I would have never bought that property.
And everybody wins.
It's too far for me. My crews don't go out that way. They're not going to travel. It was too difficult.
Wasn't feasible. Right.
But why waste the opportunity when I can team up with somebody?
Exactly.
Or if you don't want to team up with somebody, then you just know the deal and you say, hey, I want a finder's fee. Can you give me 10%, which might be $3,000?
Never has. Always look for a way to make it happen.
Yeah, that's called wholesaling.
Okay.
Deal finding, you're bird dogging, you're making a finder's fee.
Bird dogging, I like that.
So one thing, the other thing you look for is what's next door. Like we talked about, is there a bar next door and then a vacant lot next door with, grass 5 feet high?
Right.
Or is the vacant lot next door something that, like here we bought a property in Homestead and we own the house. It's a nice home. The problem is the house next door is absolutely deplorable. It needs to be torn down.
Squatter's house.
Oh, it's not even like squatter worthy.
Oh yeah. Man. Oh Jesus.
And then the lot to the right is just overgrown. It's nasty. So at that point, as an investor, you could potentially get the lot and the house, tear the house down, own the lot, but that costs money. Right. And when you do that, if you're doing long-term buy and hold and hoping the values will go up, it costs money to do that, and you're not going to get any of that money back for a long time. So the thing you need to weigh is your options is, do I want to buy that house, do my 60-second evaluation, knowing that in order to really sell this house for its maximum value at some point, whether it's now or later, I'm going to have to acquire the lot, and I'm going to have to acquire the dilapidated house. Okay.
They might have a dilapidated boat in the back too. A dilapidated boat.
Very true.
Very true.
And tires throughout the
exactly.
beer cans, and name it. But so what our plan on that one is, we're going to hold the house. We're renting it out, and eventually we're hoping that the township will tear the house down, because the townships probably have 100 houses on their houses to be raised, and they're just going to go, as they get the money, they'll start tearing down the houses, right?
Right.
So eventually they're going to get to that one.
Right. So
why should I buy an old dilapidated lot and a house on it and spend $10,000 to tear down the house when hopefully it'll be
inevitable? Right.
Okay. So we're going to sit on that one, buy and hold. Strategy is to eventually maybe acquire both parcels, and hopefully by 1 plus 1 plus 1 won't equal 3, it might equal 10, because now we have 3 lots. Another thing to look at real quick is what economic development's coming that way. Is there something big happening? Are there some road construction? Is there a major highway coming towards that area? So when I'm evaluating something, I'm not only looking at, is there steps, is there parking, is there a view, what's the condition of the outside. I'm also looking at the upside potential. So I don't have a problem buying something that maybe breaks even or maybe even loses money if there's a huge potential upside to it. So if you can afford to do that, that's fine. And occasionally we'll do that. I don't have endless amounts of money, and most investors don't. Most investors are just starting out. They can't afford to take that risk because waiting for a road to be built or waiting for economic development to come through that they're speculating can take 10 years, maybe 20 years. It could take 10 years and then maybe 10 more years before it actually starts to sprout what you're waiting for. So just in a nutshell, what do I look for? I look for things like steps, parking, view, quickly recent sales, what's next door, what's the neighbor, what's the street like. You do a quick street view and see what that street like, because sometimes 2 streets over is a completely different area. Could be the same school district, could be literally 2 blocks over. That street could be worth 20, 30, 40% more than the street you're buying on.
Where I'm at, 2 blocks, literally, it's night and day. It really is.
Yeah, absolutely. So I think that should be helpful. There's so much more to it than what we just talked about. But over time, if you just continue to hone your skills, and what I always tell people is to focus on a certain market. Don't try to buy in every market. Don't try to be commercial, industrial, residential, flipping, buy and hold. Focus on one small segment in one small area, get really good at it, and then expand from there.
And it's and like we always say, I think it's important to don't get frustrated with the process. You know what I mean? Stick to the process, because you're going to get better, and each deal that you either make or break, and you're going to learn, and then at the end of the year, like we always say, 250% better.
You got it, brother.
All right. Now that we know how to analyze a deal in 60 seconds,
yes.
Real quick, how much do you recommend? And I know that, and this is going to be different for every investor, but what percentage, this is just going to be an off question, what percentage do you think should be a buy and hold scenario in your portfolio?
Oh, wow, that's a tough question. That really depends on your personal...
There's no real clear answer with this.
Yeah, there isn't, because depending on where you are financially and your ability to handle being a landlord,
sustain it, right? Correct, right? Oh yeah,
and
right.
Depending on what areas you're purchasing in, depending on how much money you have available. In my opinion, if you have experience and you have capital and you don't need that cash flow to sustain your way of life from your rental portfolio, then I think buy and hold is long term by far way better.
Okay.
Because over time, real estate always appreciates. Over time, rents always go up. There are huge tax benefits when owning real estate, and when selling real estate as an investment property owned and rented, you pay less taxes on it, called capital gains.
Okay.
So over the long term, it's a better play. But if you need that money to pay your bills now and to grow, sometimes people start out wholesaling and flipping more, once they actually start building a sustainable income, then they can start setting some money aside and buying the hold properties.
And the reason why I ask that is because I think this shows how imperative being able to analyze the deal in 60 seconds is, because, buy and hold is a great way long term to make a lot of money, but how much of it is that really going to be of what you're investing in? So I think that the buy and hold thing is great, but you need to know whether they're flips, whether it's whatever. These are the properties you're going to be doing in 60 seconds. You're going to analyze it's going to be your quick looks, your quick takes. That's why I kind of want to ask that question on the side. So, very good, very good. Well, Alex, anything you would like to sprinkle on top of this one since I had my question there?
I'm just waiting for the spring, brother.
So am I. You and me both.
No, but it's a pleasure trying to, to do my best to help our listeners learn something. Sometimes these I know these podcasts get mundane, boring, laborious. It's just the way. That's what business is. Mm-hmm. This is not excitement. What you see on TV is not what you do in real life. And it's just it is. It's the basics. It's boring, but there are times of excitement, and those are when you find the deal, and that's when you sell a property for high profit, and that's when you make the right decisions.
That's when you get that
rush. And
that's
what charges me up.
Yep. That's when, and I think it's times like this. We hope that you guys are pulling something out of this, even if it's one per episode, one little tip or one little trick that you learn, and it helps you succeed, and it helps bring a little bit more cash into your pockets. That's why we are doing this, guys. So, and we do know that listen, business isn't supposed to always be fun and exciting. We try to spice it up a little bit. We bring in guests from time to time, like when Arnold was here, and
Arnold Schwarzenegger was here.
Yeah, we try to do.
Rocky was here.
Rocky was here. It's
The Rock.
Next, the Rock. Yeah.
Who else is coming next?
Who knows?
Do we know? Yeah.
We'll find
Maybe we'll get Ronda Rousey in here.
We'll get Vince McMahon to come in and pitch the XFL.
Yeah. We'll see.
But we hope you guys are taking something from this and utilizing it. Make sure you're checking us out on Deacon Hoover. Just follow us at Deacon Hoover on Twitter. Search Facebook for Deacon Hoover Real Estate. We're on there. Make sure you're liking us, following us on all social media sites, LinkedIn. We look for Alex on Bigger Pockets. Look for Alex on... let me see, where's he at? Look for Alex on meetup.com. He's always got a monthly meetup session that he does. Listen, Alex Deacon is all over the place. Make sure you're checking out this particular podcast every week, and make sure you're checking out Deacon Hoover Real Estate Advisors for any of your real estate needs. Now that I rambled off the ending here, guys, we thank you so much for tuning into this episode, and we will see you guys next time.